Learning Objective 2. Let's talk about the differences between the service, the merchandising, and the manufacturing companies. They all sell a product, so how do they differ? Well, our service companies, on one hand, are selling simply, as it says, their service. Okay, so if we take a look at the service organization here, we're selling our service. This is our time, this is our skills, this is our knowledge, and this is something that we could relate to a law firm or an accounting firm, consulting firms. And so most of the costs that take place in a service organization are considered period cost, and they are expensed in the period that they actually take place. So on our income statement, we have sales of our services, and we have the expense tied to the expenses that were tied to those services. Okay, in merchandising companies, on the other hand, okay, let's take a look at these. Merchandising, we simply, it's a fancy word for a retail company. We buy and resell products that were bought from a supplier somewhere else. Now, as you've learned by generally accepted accounting principles and Principles 1, when we purchase inventory that has not been sold yet, it is what your text right here considers an inventoriable product cost. It must stay on the balance sheet as inventory until we sell it. And while it is on the balance sheet, it is also called a product cost. Now, manufacturing companies, on the other hand, create the products that customers want. And so they will have a much more complicated inventory section on their balance sheet. Let's move forward and take a look at that. So, for example, if we are a manufacturing company, let me get the right highlighter for you here this time. Okay, if we look at a manufacturing company, they've got to get their raw materials converted into a finished product. And so that process involves several different things. First of all, we purchase raw materials, and these raw materials are, the lumber or the aluminum or the glass or the materials or the fabric, whatever it is that we need to manufacture our product, the raw material. And then we begin to add to that raw material. We begin the conversion process into work in process. We take raw materials and direct labor and begin to convert that raw material into an inventoriable, finished, sellable product. And that's what eventually moves into finished goods inventory. And so these are products that have been manufactured, but they have not been sold. And if we remember GAAP, we cannot consider them cost of goods sold on our income statement until we have actually sold them. So they're considered finished goods inventory on our balance sheet. So if you have, if you're an organization that manufactures a product, you are going to see, let me come back here with our pen. What you're going to see on your company's balance sheet is a list of all of these things potentially. Okay, so inventory on a manufacturing company's balance sheet includes the cost of raw materials, the cost of the labor and the overhead that is involved in converting those raw materials into a finished good, but have not yet made it to that point, and then the costs that actually have been tied up in finished goods that are ready for resale. So we can see a little bit about how these differ. Okay, if you will take a look with me here, we have, let me come back up to our highlighter here. Our service company. Remember, they're selling a product. They're selling their service, their knowledge, whatever that happens to be. So we have our service revenue, and typically it involves the salaries of the people providing the service, the rent of our building, wherever we happen to be. Okay, and if we're looking at the merchandising company, on the other hand, we're going to have sales revenue, but we also have something called cost of goods sold. Notice we don't see that on the service company. Now we're also going to see cost of goods sold in the manufacturing company. But let's look at the difference in how that cost of goods sold is calculated. For the merchandising company, if we're Lifeway Bookstore, we have some beginning merchandise inventory on stock and on hand, And as the spring semester nears, the bookstore will purchase more. Okay, so they'll have additional purchases, and the freight of getting those purchases to their store is also part of the cost of inventory. So the books that they had on hand before, plus the cost of the books that they purchased for the new semester, will give us a subtotal of this is the merchandise that they have available for sale. If we go out and count the inventory that is left remaining in their inventory at the end of the period, we had $5,800 worth of books available for sale, and at the end of the period, there were only $2,200 worth of those books left. What happens is we sold the rest of them. Okay? But trying to get you to focus on the merchandising company, we simply purchase and resell. And the manufacturing organization, on the other hand, notice that we start out with beginning finished goods inventory. And then I'm going to add to it the cost of goods manufactured. And this cost of goods manufactured is going to have those three items that we just looked at: raw material, work in process, and finished goods. We will use all three of those components to come up with our total cost of goods manufactured. So if we know the finished goods that were on hand and ready for sale at the beginning of the period, we know the cost of finished goods that we have manufactured this period, then that shows us that at some point we had $5,800 worth of merchandise available for sale. Let's consider this the textbook publisher, and this is the retailer selling those textbooks. If we had $5,800 available for sale, the same thing happens. If I go out and I only have $2,200 in finished goods inventory, then I must have sold $3,600 worth of those books that I have published to Lifeway. All right. So the service company does not have cost of goods sold. You might sometimes see cost of services, but it's hard to calculate, so it's very rare, especially unless you are internal managerial accounting, that you will actually see a total cost of services. So these are the income statements that you would see and how they vary for the different companies. If we come down and look at the balance sheets for these companies, they're a little different as well, because on our service company, they don't have inventory for resale. They're selling a service. We don't inventory that. On the merchandising company, what they have on their balance sheet is inventory that they have purchased for resale. All right, so once again, if we were to go back up above, they sold $3,600 worth of inventory. $2,200 is still sitting on our balance sheet. Finished goods ready for sale, merchandising inventory. On our balance sheet for the manufacturing company, on the other hand, we have inventory as well here, but we have raw materials inventory, we have work in process inventory, and we have finished goods inventory. All right, so to show you how the financial statements will differ for these three different kinds of organizations. So at the end of your text, we have some sample problems. It's, I think, 18.5 is the one I have prepared for you here. It gives you a list of costs and asks you to compute the cost of goods sold, and a cost of goods sold for who? A merchandising company. All right, so think about the things that we just talked about. There's website maintenance. Is that part of the cost of managing our inventory? No. This is probably just going to be an administrative cost. Delivery expense? No. If you'll remember from generally accepted accounting principles, freight in is part of the cost of our inventory. Whatever we have to pay to get our merchandise to our location ready for sale is part of the cost of inventory. Freight out, okay, or delivery expense is not. That's just part of the cost of selling your product. It is not an inventoriable cost that could end up on your balance sheet before your inventory is sold. For example, I had when I was in public accounting, we had an organization that bought brake parts from China. Well, that's a very long boat ride to the United States. Needless to say, that is some very expensive freight. And so when we would calculate the cost of the brakes that they had in their warehouse for resale, the cost of freight in is part of the cost of their merchandising inventory. As we saw on the prior screen, obviously purchases. We have purchased $40,000 worth of inventory for this company, whatever they happen to be. Windshield Pro. Maybe we're purchasing windshields. So what we need to know here, okay, is how much inventory did I have to begin with? And it tells us we started out with $8,200 worth of inventory. We see that here, beginning merchandise inventory, $8,200. This is the value, this is what I've paid for the windshields that are already in my inventory, ready for sale. Okay, but do you see the connection here? And I have purchased $40,000 of windshields. I started out with 8,200. I've purchased another 40,000, and just like I said, the 2,700. Okay, freight in is part of the cost of our inventory. So if we take our beginning merchandise inventory, we add the purchases, we add the freight, we know that I should have at least $50,900 worth of inventory available for sale. All right, so at the end of the period, okay, if I check my merchandise inventory and I only have $5,100 worth of inventory left, this is simply telling me, if we were to come here, okay, I started out with 8,200. I've purchased 42.7 in windshields. I have 50,900 available for sale. At the end of the period, there was only 5,100 out there. What happened to the rest of it? It has been sold. I have sold $45,800 worth of windshields in this particular company. All right, I'm going to give you some homework to practice on, but this gives you some idea of the different types of costing that happens for service versus merchandising versus manufacturing companies, and we will continue to study primarily what happens in the manufacturing organization as we continue through this semester.